Currency pairs explained. Warm welcome. Hey everyone, welcome back to the TheRockFXHub. I'm Peter, you can call me Peter the Rock, and today we're continuing our journey through the world of Forex trading. If you haven't watched video 1 yet, go back and start there. It sets the foundation. Because today we're building on it, diving into one of the most important topics in Forex, currency pairs. This lesson is also inspired by Anna Couling's book, Forex Beginners, what you need to know to get started, and everything in between. Anna breaks down currency pairs beautifully, and I'm going to walk you through her core ideas along with a few real market examples from New York, London, and Sydney. The basic idea of currency pairs. Let's start simple. In Forex, you never buy or sell just one currency. You're always trading one currency against another, and that's why we call them pairs. Think of it like a tug-of-war. When one side gets stronger, the other side weakens. If you trade the euro to US dollar, you're comparing the value of the euro against the US dollar. So if euro to US dollar rises, that means the euro is strengthening or the dollar is weakening. If it falls, the opposite is happening. Anna explained that beginners often forget this dual relationship. They think they're buying euros, but really, they're buying euros and selling dollars at the same time. Base and quote currency. Every pair has two parts. 1. The base currency, that's the first one listed. 2. The quote currency, that's the second. The base is what you're buying or selling. The quote tells you how much it costs. For example, in euro to US dollar equals 1.0850. That number means 1 euro equals 1.0850 US dollars. If the price goes up to 1.0900, the euro got stronger. If it drops to 1.0700, the euro weakened. Simple, right? But understanding that tiny movement, those pips, is where traders start to make or lose money. Major, minor, and exotic pairs. In the book, Anna organizes currency pairs into 3 main categories. 1. Major pairs. These include the US dollar on one side, paired with other strong global currencies. Euro to US dollar, pound sterling to US dollar to Japanese yen, US dollar to Swiss franc, Australian dollar to US dollar, NZD/USD, and US dollar to Canadian dollar. Buyers and sellers. If you trade during the London or New York sessions, majors are your best friend. For example, during the overlap between London and New York, euro to US dollar and pound sterling to US dollar are extremely active. 2. Minor pairs crosses. These don't include the US dollar. Think euro to pound sterling, euro to Japanese yen, or pound sterling to Japanese yen. These are still highly traded, especially when markets in both currencies regions are open, like London and Tokyo. 3. Exotic pairs. One strong currency, like USD or euro, paired with smaller or developing market currency. Anna cautions beginners to avoid these at first. They often have high spreads and low liquidity. Stick to the majors when you're starting out. They're smoother, cheaper to trade, and better for learning price behavior. How quotes and prices move. When you open your trading platform, you'll see 2 prices for every pair. Bid, the price you sell at, and ask, the price you buy at. The difference between them is called the spread. Anna explains that the spread is basically the broker's commission, and it can change depending on market volatility. During quiet times, like late in the New York session when Sydney is just opening, spreads are small. But when major news hits, say, AUS, jobs report, or a Bank of England interest rate decision, spreads can widen dramatically. She gives a great example. When the U.S. Federal Reserve releases its rate statement, the dollar pairs can move in seconds, and spreads may double for a few minutes. That's why patience and timing are everything. Understanding pips and price changes. A pip is short for percentage in point. It's the smallest standard unit of price movement. For most pairs, 1 pip equals 0.0001. So, if euro to US dollar moves from 1.0850 to 1.0855, that's a 5 pip change. On JPY pairs, a pip is 0.01 because of how the yen is valued. Anna highlights that knowing pip values is essential for calculating profit, loss, and position size. Once you know what 1 pip is worth, you can decide exactly how much to risk per trade. Why currency pairs matter for strategy. Every currency pair has a personality. Euro to US dollar tend to trend smoothly. Pound sterling to Japanese yen, often called a beast, moves fast and volatile. Australian dollar to US dollar reacts strongly to commodity prices and Asian session data. Understanding those behaviors helps you choose pairs that fit your trading style. Anna also introduces the idea of correlation. For instance, euro to US dollar and pound sterling to US dollar often move in the same direction because both are measured against the US dollar. If one goes up and the other doesn't, it can hint that momentum is shifting, a clue many pros watch closely. Common beginner mistakes. Anna warns about a few traps that catch new traders. Trading too many pairs at once. Focus on 2 or 3 until you master their rhythm. Ignoring the quote currency. Remember, news from either side can move the pair. Forgetting about time zones. If you're trading pound sterling to Japanese yen during the New York evening, volume will be low and spreads wider. She reminds us that successful traders specialize. They study their pairs the way athletes study opponents. Wrap up and call to action. So to wrap up, every Forex trade is a relationship between two currencies. The first is the base, the second is the quote. Prices move in pips, and spreads are the cost of doing business. Major pairs are your training ground. If this clicked for you, give this video a thumbs up, hit subscribe, and share it with someone who's also learning Forex. In our next lesson, we'll talk about how the Forex market actually works, from trading sessions to global liquidity, so you'll know when to trade for the best results. And if you want to go deeper, grab Anna Coulling's Forex for Beginners. It's one of the clearest, most practical guides I've ever read, and a perfect companion to this series. I'm Peter The Rock from TheRockFXHub, where knowledge meets profit. See you in the next video.